Stavros Tousios for M4Markets. Today we're going to have a quick look at the Dow Jones as well as the dollar against the yen. We have talked about the Dow Jones maybe a couple of weeks ago, and we've actually had some interest in how the top of the channel is going to react here. And you do see, however, there have been multiple attempts to cross back below this descending channel and pretty much rejoin the downside trends, but all of them have failed. And we saw a bounce, but this is something we saw back in December as well. We did see a bounce, but it came with further losses. Now we do see another bounce. It is going to come with further losses because we don't really need to get into that channel to actually go lower down, right? And the truth is that the more times we actually go onto the rejection level over here, the more the chances also for an actual eventual break in to the channel. Now, in the shorter term over here, we are seeing no signals on the RSI. Contrary, we have had a 4-hour signal over here for a potential move to the upside, which we saw. So we do have to take now the top all the way to the bottom, see where we have so far come to. And we've come to the 38 Fibonacci, which is a typical level for the first move of a retracement. Now, if we do continue to the upside, there is high likelihood that's going to get us up to around the 33.60, which is the previous peak back in March 6th. But if we're going to lose the 50 on the way down, which is where we bounce currently, then the chances of sliding lower are going to increase. Typically ABCs do this type of correction does 50%. So that would actually take us to the 100, which is around the 33.44, which is the 23 Fibonacci as well. So this actually has good chances of getting back up there as long as it manages to stay above the 32K handle, which, by the way, just noticed, this is where we got the bounce. Now, when we look at dollar against the yen, it's actually coming close to a very important level. This is, again, a channel, but the bottom side and ascending, contrary to what we saw for the Dow. We have had this leg to the upside, kind of looks corrective as well. And then you see we have 1, 2, and 3, and 4. And this, guys, starts to look like some sort of wedge. Okay, and you do know that wedges typically either offer reversals or corrections and further continuations to the upside, depending on whether they are leading price action or they are ending a structure. Now, this could be both, because you could have leading price action like this, or you could have ending price action like this, which means we're going to go higher. Either way, we have corrected from the bottom to the top below the 62. We actually are under kind of pressure because we also attempted to cross above the 50, didn't happen. So if we lose the 79, there will be high likelihood that we're going to go and revisit the previous low. But we have actually a decent divergence on the 4-hour, okay, which suggests indeed that this might be an actual wedge. So maybe we're not going to go to 79. Maybe we're just going to flash that low over here, okay, and then start correcting. Only when we go up can we then kind of have a bit more clarity on whether this can continue higher or we're going to turn back lower again. But it seems like to me, at least in the short term, this channel might hold, might offer a move to the upside, which would then, we're going to have to use the resistances as Fibonacci terms, 132, 133.30, 134.20, and this is how it goes. And as long as we remain below the 50, don't forget the bias remains downward rather than anything else.